Welcome to the second of our 5 live webcast series on business disruption. This episode today is on financial risk. My name's Steve Waite, I'm the CEO at the Business Centre, and I'll be host today, and John is going to be our guest. For those of you that don't know the Business Centre, we're a not-for-profit organisation based in Newcastle, been around for about 35 years, helping small businesses in New South Wales. And this is why we decided to run a series of webcasts where we invited 5 experts to provide you with simple advice to help navigate through what can only be described as a profound period of business disruption. Our 5 episodes in the first series are attuned to small business experience of this situation, and we want to ensure that that information is deliberately practical and that it offers helpful insights for you. Our first episode in this series was last week on people risk, and our second episode in this series today is focused on financial risk, which we know is particularly relevant at the current time. Today's guest is John Garris, Managing Director of the Garris Group, Newcastle Accountants. The Garris Group is a professional, family-owned and operated financial services firm that aims to build a strong and continuous relationship with their clients built on their valuable personal, technical, knowledgeable expertise. As the Managing Director of the Garris Group, John has led the cutting-edge use of technology in the practice and his expertise in the use of zero cloud-based accounting in small business operations. We have live questions coming through that we're monitoring during this webcast, and we'll try to answer some of those towards the end of the webcast, but we're going to keep rolling with those questions, capture that footage, and we hope to share that later today. Now I'm going to begin by saying hello to John. John, thanks for being here today.
Absolutely, pleasure.
I know that you and I were discussing this over the weekend, and it was a fast-moving piece. We know that the government responded with responses to household pressure, to casuals, to sole traders. We also know there was a response around business in regards to taxation and finance, but also a response around regulation and trying to relax some of the insolvency and bankruptcy issues, and in regards to holding general meetings of businesses regarded as ASIC's concerned. So
there's been a few things. Yeah.
A lot going on, a lot of response, but for us, you and I just want to talk it through today.
Sure.
Thanks for being here. Thanks for doing all the preparation that you've done.
That's all right.
And I guess we might just start off with, how are things going in your business? What are you doing?
Yeah, well, it's been obviously a pretty chaotic week and a bit. You know, our hearts really go out, I think. We need to get that, I think, out in the open right from the get-go. That has been an incredibly difficult time for everyone.
Yep.
We understand that, and I think the main thing from our point of view as a firm is really communication. I mean, that's going to be a bit of a reoccurring theme with a lot of these questions today. It's really emphasising, I think, the importance of communication. So we've just been trying to just absorb the information that's come out from all pillars of government. And just trying to get a version, I suppose, of that of those announcements out to our clients, so that it makes a bit of sense. Because there are naturally some political jargon and so forth that fills those announcements. So we're trying to cut through that, get the information out as quickly as we can, and then of course just the one-on-one contact, particularly with our small to medium business clients, naturally, but also the broader community that
like we were talking about earlier, that communication piece is you've observed and I've observed, it's really picked up. People are starting to use different ways of communicating with each other. It's going to be vital, isn't it? Absolutely
vital moving forward. Particularly as we're seeing some shutdowns, obviously, and we'll probably talk some of the specifics of certain industries, hospitality and the like, that have been forced to shut down. But as the coronavirus sort of pandemic sort of increases throughout our communities, we're going to see probably, I think, inevitably some further shutdowns. And so, as you say, communication, whatever that might look like, I think is really important.
I'm going to occasionally look at the screen here to see what sort of questions we've got coming through, John. But just first question for you, though, is in regard to what are your views, what are your insights on the biggest impacts that you're seeing on SMEs right now? What types of things are you beginning to see already?
Yeah, well, definitely in our particular space, we do have a lot of hospitality and small bars, venue hire style businesses. They've certainly been significantly impacted, and I think we need to be quite raw here today. And there's been a few tears already on the phone from a lot of people. Everything from wedding venues that have lost all their bookings, all their income until December.
Yeah.
Obviously, some small bars that have shut yesterday in line with the government's announcements.
Yeah.
And other hospitality venues, cafes, restaurants, etc., that have either shut or had significant reduced trading.
So typically what's happening there is that flows on through the supply chain with creditors. What types of behaviours or responses? What's falling there?
Look, I think generally creditors in particular have been pretty understanding. I mean, I think what we have to understand, and this will probably come out during conversation, that a lot of the creditors are small businesses, just like the restaurants and cafes. Everyone's in the same boat. Yeah. So I think generally there's been a great deal of understanding about the situation. Yeah. But I suppose overarching all of that has been a bit of an overriding fear. There's been some worry for those businesses, how they're going to pay their bills and just get out of this, come out the other side. So. So communication, like we said, between small businesses is really important to get each other through this. Absolutely. Okay, let's dive a bit deeper then, and the next question I'd like for us to start to think about is what government grants, taxation offsets or money that's been announced to help businesses, especially for small businesses, what have you picked up and gleaned from the swath of information that's come out? Well,
how do we interpret that?
It's been thrown at us at a rate of knots. The government's really just throwing the kitchen sink at this thing. We've had federal government announcements, and we'll go through some of those in further detail, some state announcements as well, and there'll probably be some other smaller announcements behind that, and of course different announcements from the Reserve Bank as well in conjunction with some of those.
Do we want to start then with the response, I guess, at the personal level for people, casuals or sole traders who are immediately in a position where we want to start there with the personal
Well, I think the feeling was, particularly out of the first stimulus announcement, that there wasn't enough being done for sole traders. And to be honest, from what I can see, I'm not necessarily sure there's a huge amount for the sole traders. I mean, what they have done is allowed them to access the Youth Allowance Job Seeker.
And that's without the asset or income test, is that right?
Yeah, that's right. They've really relaxed a lot of those.
So people can apply right away.
Yeah. And that's what we've seen yesterday. There's long queues right around the country at different Centrelink outlets, because you need to get in the system. And of course, when there's things happening within our economy the way that they are, all of these things, government websites, etc., are crashing under the load. They're not really designed for this influx of activity. So we are seeing people sort of line up in the streets to get this allowance. They've effectively doubled it. So it was $550 a fortnight. It's been doubled to $1,100.
So if I'm a sole trader, I've been operating my business up to now, I can then, because I've lost my income, I can then become eligible for this, and then I guess when it comes to tax time, we roll everything together and
correct. Correct. Yeah, that's right. I mean, what we're seeing is that the proviso has been if you've lost 20% or more of your trade, it seems to be the benchmark. Now, how do you actually practically make that work? I'm not sure. I think that's just something that they've thrown out in that sphere. And actually, the same rules apply for the sole traders that are looking to access some of their superannuation. I mean, that's the other aspect to this that they're sort of saying. I really would, recommend that for viewers that are sole traders, and we'll get on to some of the other specifics if they've got payroll obligations and how that might help them as well. If they're an employer. But we are just talking at the moment here for, if you like, the one-man band style.
And this is, with some of the clients you've worked with already, it's important they're consulting and letting their staff know in regards to accessing these arrangements and potentially keeping them on in some way?
Well, what we're seeing is, and I made some inquiries prior to this, particularly around super. The superannuation industry wasn't really informed prior to these announcements from the Prime Minister on Sunday. So naturally they're getting sort of overwhelmed at the moment with requests for, okay, well, how do I actually access some of my superannuation? It's the application process is supposed to be done through MyGov. That again crashed yesterday, so there will be a degree of patience people will have to have. They'll be able to access up to 10,000 as long as the application is in prior to the 1st of July. Right. And then potentially they'll be able to access a further 10,000. And that seems to be between the period of July and September next financial year. But I really would stress that they need to get advice regarding that. There's been a little bit of publicity surrounding this already in the papers today from the superannuation industry. Not sure that this is actually going to benefit long-term some of these people, but we're really looking at short-term solutions right now just to keep their cash flow or to support their cash flow as much as much as.
And I guess people are at this critical stage. You probably do need to sit down with your accountant and just look at that sort of decision making if you're drawing down, and you need to look at it in the wholeness of your.
Well, that's right, and unpacking, I suppose, all of these different announcements, and I suppose there's been an added complication because they announced again some things initially a couple of weeks ago, and now, there's confusion surrounding, what does the second round of stimulus mean? Does that mean that's on top of what's already been announced, or is it amending what
because there were some other offsets around assets and intangible assets.
Well, that's right. I mean, the income, the immediate asset write-off threshold has been increased. So really, they've also increased or made it a much broader variety of businesses. You've got, if your aggregated turnover is less than 500 million, I imagine that'll be most people probably on the on the webcast today, then they can access this. Now, I think there's an important point to make around the instant asset write-off. First of all, the current provisions in place, it's not 30,000, it's less than 30,000, increased to 150, it's less than 150.
Right.
Now that's ex-GST, so we've got to take GST out of the equation here. And the other thing is, I know a lot of people that are probably watching are saying, well, that's all well and good to increase the threshold up to 150, but I don't have the cash flow at the moment to invest in these sort of things. I think what they also need to understand is that if they are able to access small business concessions, small business pooling concessions, then the pool balance will lift to 150. So we've got a lot of businesses that are carrying, say, pool balances of between 80 to 100,000 that before these measures were put in place, they were only able to depreciate 30% of that pool balance. They'll now be able to write that off. So they don't necessarily have to go out and spend anything more. They'll still get some tax benefit from these changes that are put in place. So
I had another question there that we were talking about on Sunday. With regards to this announcement and eligibility being from the 12th of March through to 30 June, a sole trader who may have been just kicking along and looking at restructuring, if they then restructure and become a company now, and then, as a result of that, register for PAYG withholding and become a company and pay themselves a salary. Are they going to, in the fine print, is that out yet? Are they going to be able to benefit from a perfectly rational and reasonable decision to restructure their business? I know that we did discuss this on Sunday. It appears as though they're plugging that loophole because there would probably be a lot of sole traders looking to quickly restructure, as you say, into a company and then try to access some of these provisions, just pay themselves, if anything, a little bit differently as an employee. It does look on the face of it as though you won't be able to do that. The other aspect is, I suppose, if you're already, you mightn't be paying any employees yet. Technically, when we register for someone for pay-as-you-go withholding, you can backdate the registration. So the question I think should be put to the ATO, if somebody in this current quarter backdates their registration to the 1st of March, quite honestly, looking to pay people to try and help them out, does that mean that they qualify for this? So it's going to be in the fine print, isn't it, as it's implemented and becomes law?
Exactly right, and that's an important point, that a lot of these measures aren't legislation yet. It looks as though there's not a lot of resistance from opposition on that. I think we're trying to, or government's trying to act in a bipartisan way as much as possible in these circumstances. A little bit like wartime, I suppose, in some respects.
Indeed. Well, let's step our way through a few more, moving more fully onto the business responses and the stimulus package. So what do you think about those?
Well, I think definitely the main one that a lot of people will be interested in is the cash flow sort of side of things.
So how does that work?
So the first stimulus announcement was, as long as you were paying employees, and you mentioned the 12th of March date there, as long as you're paying, you don't necessarily need to be withholding any tax, but just paying some employees, then you'll be able to access, or previously, 2,000 minimum with a maximum of 25.
That was the first announcement.
That was the first announcement. Now, what's happened is after the second round of stimulus, that's now been amended so that it's a minimum of 20,000 now, as long as you're paying employees, to a maximum of 100,000.
And the intention there is to try and retain the labour force and keep people employed.
So some of the fine print on that is that it's now two separate, if you like, packages rolled into one.
Right.
The first is focused between the March and June period. So It'll vary a little bit depending on whether or not you're a quarterly PAYG lodger in your BAS or a monthly BAS lodger.
Okay.
If you're a monthly lodger, what the ATO will do is they'll look at what's your PAYG withholding for the March month, and then they'll triple it.
Okay.
So that's the first part of that. Whereas if quarterly, naturally it covers the January to March period already, and they'll just look at whatever that figure is. So that's capped at 50 to start with, up until the June quarter, and then what you'll get is based on whatever you've accessed throughout that period. It'll match that over a monthly period, so you get 25% of the total.
Now, as I understand it, there's no application for this. It's going to be an automated process through the ATO. Is that right? Yeah.
So there's a couple of things that really are important here. One, it's not a cash payment, and I think there's been a lot of commentary surrounding this. People thinking, okay, well, when's it hitting my bank account? It won't necessarily hit your bank account because it's an offset against your BAS once you lodge.
Okay.
So you need to lodge. That's the other thing. We need to keep lodgements up. It will work through the tax system at such time as it is lodged, and that's probably been one of the criticisms that they're not going to start. The benefits won't roll in until late April. And we're naturally.
So on that point, what happens if I fall behind as a business owner in my ATO obligations?
Yeah, well, it was more coincidence more than anything. I was at a tax summit conference, major conference the week before last, and the commissioner himself, Chris Jordan, was there in attendance giving a keynote speech. He made it very clear to all of us bean counters that that in the room was a wild party that one for a few days. Yeah, he made it very clear that from high management all the way down, the message has been show empathy towards businesses. We're going to delay tax as much as possible. At minimum 6 months. If you're already on a payment arrangement, and we've had this at the coalface already, they're deferring payment arrangements, effectively just cancelling them, rolling them forward for about 6 months already, which has been helpful. So they shouldn't be a problem at this point in time.
Okay, I'm just getting a read on some of the questions to see if we're hitting off on what people are asking. And we're just about to come on to this question actually. There's a question here from Laney who's asking about borrowing and the current risky environment and trying to trade through and just digging in. So the next question I was about to lead us to, John, was it just exactly that about working capital? What do I do? What's your advice with regards to this response in the banking or the loan environment?
Yeah, well, as we were talking about just before coming on air, what's really has been announced is yes. The federal government is arming the banks with somewhere close to $100 billion worth of funding specifically for the small to medium business
So they're going
market.
halves basically with the banks. It's a 50-50 thing. The RBA is tipping in, the banks are tipping in.
Correct. Yeah, they're going to go 50% guarantor on these loans, and they're relaxing a lot of the lending restrictions. Because as you can imagine, we're a heavily regulated market. There's each bank's slightly different in terms of how they assess risk.
This is the announcement, but Laney's asking when we were talking before, what's actually happening there? How do I get there? How do I get to my bank manager? How do I get to my bank and apply? What's that looking like? How's that falling at the moment?
At the moment, the banks, as you can imagine, are being just overrun with questions surrounding, okay, well, how does it work practically? The short answer is they're not sure yet. The packages are coming. They're trying to put them together as quickly as they can. It's likely early April is what we've been told that these will be available. The process would be, and this is really something that I think all small to medium business should be doing anyway, is already either booking in or having that conversation with their small business banking specialist. There could be a whole variety of reasons for existing loans, and we'll probably get to touch on that in a moment.
Just hold that one. We'll come back to that. We've just got another really good question here from Jane, who's asking about a payment arrangement with the ATO that she's actually got in place at the moment. Will she still be able to then be eligible for the announcements that the government's made in regards to the stimulus?
Yeah, absolutely. I mean, the first point there on her current arrangement, if that's becoming difficult or just not possible to meet those commitments, my experience has already been the ATO are happy to just effectively cancel that, and we'll revisit again probably in July.
And still be eligible for anything.
And still be completely eligible as long as she's keeping up to date with her lodgements.
Okay, so let's come back to the credit arrangements then. So the 250K that's been spoken about. How do you see that as working in that regard?
Well, obviously it's helpful, but the problem is, and I think this will be a bit of a recurring theme with people online, is they're in a lot of industries, their cash flow is either completely dried up already or is getting to dangerously low levels. So and employees are being let go. There's been, it's just, we're talking obviously a lot about the economic cost of business, but there's the human costs as well. You know, it's going to be difficult if people aren't paying employees, then obviously the amount of withholding tax that's relevant is going to be lower. So the impact that it's going to have it remains to be seen exactly how well it'll work. I get why they're doing it that way, because they want to try and keep the unemployment rate down as much as they can. I mean, it's inevitable that it will rise, of course. So look, it's okay, but I think more needs to be done with regard to particular industries. Definitely. You know, we talk about things like commercial rents. You know, we've seen all sorts of media coverage surrounding this. You know, how do I meet my rent obligations and other things? You know, my view is there should be a complete freeze on all rents altogether. That's challenging in the current market.
But you can, I mean, we've had advice from Osborne Law in regards to leases, and their advice is, you know, speak to your landlords. I think the conversation needs to be held, and it comes back to what we spoke about potentially in this realm of capital. What would you be advising businesses in regards to their short-term debts and their obligations, and how do they fundamentals of managing the finances of their business? What do you think?
Well, I think particularly for us, and I can only speak about our experience, the March quarter is actually always seen as probably the most critical quarter. Because by the time that the sort of the compliance aspect of you know, of business, by the time the March BAS is done and completed, we've done our bit and so on, it's normally late April to sort of early May. So we've got a very good understanding by that point in time about, you know, the financial position of that particular entity in that given financial year. Now, previously, the focus has then been about, okay, well, how do we position ourselves in such a way, one, to generally, you know, minimise tax for my family group, but also two, to position ourselves in such a way where we can, you know, look to borrow with power to help grow and expand our business. Now, I suppose we're flipping that a little bit to, you know, making sure the businesses are staying alive. So really, I think that piece should be happening already with accounting firms, with their clients, trying to look through, just getting back to basics, you know, line by line.
Indeed,
you know, working out what your break even is.
I guess, and that's why we call this a disruption series. I think we're living in an era where disruption has become the new norm. So speaking with your accountant and looking at planning and looking at what you can do to tweak your business, you know, despite the severity of this situation, it seems to be an ongoing normal situation. I've just got a quick question here from David. I'm sure it'll be quite easy to resolve, but David's asked, I'm actually operating as a sole trader but registered as a company. I've assumed I'm not considered a sole trader, or am I?
Well, it's a bit of, I'm not sure what it is at the moment.
I think if you're a company, you're a company.
You're either a company or a sole trader. I think that sometimes, again, the terminology and the jargon can be confusing. I would probably say to David, I'm more than happy to get into the specifics of his. If he wants to, he can get in touch.
All right, let's look on then at another question, which is, what are your thoughts on negotiating with your suppliers to get better price or better credit terms in this environment?
Better price. If you can do that, let me know how you've done it. I think getting a better price is going to be a real difficult challenge, because, as we're talking about, again, everybody's in the same boat. So, you know, small businesses, the whole supply chain's been impacted. So asking for a discount or a reduced cost price, I think that would be challenging. I think, again, it comes back to communication. And we've really seen this with some quite big groups already. They've been just calling around to all of their different suppliers, just letting them know exactly what's happening, the way that they've been impacted, and of course trying to get some relaxed repayment terms. I think that's probably the best thing that you can do at the moment, and just do the best you can.
So
with them.
Communication, as we said, is important. We're all in this together.
It's the underlying theme here.
I mean, at the same time, we want to operate a good business and have good business practices. So what do we do about the normal terms? Do we still apply, you know, invoicing and recognise that we've issued, that we've set terms, we've recognised, and so that there's some point in time that it's marked? Are we still? What are your thoughts?
Yeah, I think that, well, it's a case-by-case basis. Depends on the industry that you're in, I suppose, and, you know, individual business owners within their space would have a better feel for whether or not they need to make some adjustments to those payment terms. Whether or not people, you know, worry too much about terms at the moment is probably a reasonable sort of comment as well. It's just, again, I think it's just doing the best they can within their particular.
Now, I know that you've got clients that are in the trades as well, and one of the responses that I saw coming through from government looked quite reasonable, and it was encouraging the retention of trainees and apprentices. Was a 50%.
50% of their wage, effectively, for 9 months.
Which could be anywhere from $9,000 to $15,000, depending on where they are.
It's a cap of $21,000.
Up through to September, isn't it?
Through to September, correct, exactly. And that's paid quarterly. Applications for that, I think the proviso is that apprentice or trainee has to have been in training by the 1st of March, or that date. The applications are made through the relevant apprentice government body on that front. But of course, if for some reason that employer is not able to keep that apprentice on, and they go to a different employer, that employer would be able to access the same stimulus as well.
Got another question coming through here. If a company is registered as PAYG withholding but hasn't been paying, can it pay a minimum amount to directors to then qualify for the 10K?
Yes, as long as in the March BAS, there's at least $1 effectively paid with no withholding tax, then they would at least get the minimum amount of stimulus. That's right.
That's good to know. So we're getting close towards the end of what we're casting today. I want to emphasise that there are a number of other questions that have come through that John and I are going to continue to talk about, and then we'll have an extended conversation about a few other areas specifically, which we'll share up through socials. But is there anything else, John, that you particularly wanted to touch on? Because I know that we asked you to give us your 5 tips, which you've asked every expert to do, but is there anything else that we haven't covered in our conversation today that you'd like to highlight?
I think that I understand. I think the important piece here is that I know that small businesses, they really want help right now. And whoever their accounting group is, whatever, by all means keep that communication up. We, certainly for our clients, the message is that we will get to you. And it's just going to be a little bit of a delay in getting through to everybody. But we all, I think, need to work together like we haven't before.
I think so.
And just solve problems together. It's not going to happen. I think people need to realise as well that they're not alone. I think one of the top tips was really to talk to your employees if you're a group. There's a couple of reasons I think that's important. One, as we said before, there's a real human cost here, and employers are going to have to let go of employees during this time. And I think having that group discussion with your employees, I think it provides them with a bit of dignity as well, understanding about why they're maybe having to be moved on, or and also I think it provides an excellent brainstorming opportunity.
Absolutely. I totally
solve
agree.
Problems.
Well, I'd have to concur. At the group here at the Business Centre, within 1 week we essentially turned our business around to be an online business, and with the help of the guys from Fortronic also, a collaboration with these guys, we've been able to, through their means, been able to do that quite quickly and rapidly, and I'll talk more about that at the end.
Absolutely.
So perhaps we could, we've got another question there. Archie asks, if a company is registered as PAYG withholding, did we do that one? Yeah, we did that one. Go to the next one. Christina asks, what is your advice to landlords who need to make mortgage payments when your advice is to hold rental payments? Delayed mortgage payments are capitalised, resulting in higher future costs.
My advice would be to go straight to the bank and ask for a deferral for 6 months. They should have really been doing that already, but it's not going to be automatic. So I think that conversation piece needs to happen.
Proactive.
Obviously, if the business isn't paying the rent and they've got a mortgage payment that they need to meet, then that from that end they need to have a hold on. So after 6 months, then the two will effectively cancel each other out.
Okay. Well, let's get to your tips, your 5 top tips to help people manage their cash flow right now.
Yeah, well, I think it really is important to speak with a proactive accountant, whether that be us or whoever they're currently dealing with. I think that is a really important piece. There's a lot, as I said, of detail in these announcements, and they're coming thick and fast. So I think just really being able to analyse that, what parts of those announcements are going to work best for their business. I think that's really crucial. And of course, as we said before, just getting back to basics and just working with each individual business is going to be unique and have their own things that are important to focus on. But I think that needs to happen as part, I think, of the March quarter. as I was saying before, it's not a bad quarter for that to happen.
Yeah.
You're able to then apply some of the economic stimulus measures or work out how best to apply that to the business, along with working out, just what they need to survive, where they can trim, working on their cash flow generally.
And your next one was speak with employees.
Yeah, which we spoke about before.
Yeah.
I'll just have to find where my other ones were, to be honest.
Yeah. Be prepared and think outside the box.
Yeah, just being flexible. And I think that one of the great things that we've seen already is that I think a lot of businesses, certainly on social media, have already been doing this. They're working out new ways that they're able to.
I think so. I mean, it's not too early to talk about innovation. It can be a bit trite to think about the critical stress that people are under, but we've seen an amazing lot. Earp Brothers with their gin distillery. Yeah. We've seen a group of pubs in Western New South Wales turn their pubs basically into retail shop outlets. Yeah. So I think it is a time gone by that we're back in where you have to be relying on ourselves a little bit more.
Absolutely.
We've spoken about speaking with creditors and stakeholders, and as we said, working together. And your last one, don't panic, lead with courage. Yeah.
I think that's what a lot of employees are looking from their business owners at the moment is leadership. Yeah. It's not going to be easy. No. We don't know how long this is going to last. Yeah. And I think the best thing you can do is lead with courage and just give some certainty as much as you can. As much as you can in these sort of times. So.
Okay, we're going to keep talking after this, but first I'd like to thank you and the Garris Group. If you want to contact John, please email the Business Centre, and we'll forward on your details. If you want a business advisory session, and this is what these webcasts are run under, is from the New South Wales Government Business Connect program, you can speak to one of our advisors. Sometimes I know from just talking things through in business, it is of great benefit, and our advisors are able to help you. We're all working remotely, and we're here to help and assist. I'd also like to emphasise this is the second of 5 in a series. The next one will be on Thursday, featuring experts from Perform HR, and this will be on operational risk. That'll be at 11 a.m, 26th of March. We're then working through the next one, which is market risk, supply chain logistics, those types of areas of business operation. That will be 11 a.m. on Tuesday, the 31st of March. And then we'll conclude with reputational risk, which is very important to manage the reputation of your business going forward. And that will be with Pete Chapman from Enigma, a great company in regards to PR and advertising. We'd also like to welcome you to our podcasts that are coming up soon, and also in regards to all the shareable stuff that we're putting up as extras. We thank you for your time today. As I said, John and I are going to wrap, and we're going to keep talking after. Thank you.